To quickly talk about how to use this federal tax withholder estimator template. So this is a template. So the first thing you should do definitely is to just make a copy so that you can tweak it for your own special cases. This is already a copy, so I'll be directly using this file. After you have the copy, the first thing that you need to do is definitely read through the disclaimers because they will tell about the assumptions that we are using in this template because it could be oversimplified for your case and make it not accurate enough for you. So make sure you understand what our assumptions are and what uh, things you need to keep in mind. I'm not going to go through this in detail, but this is a template that we make for a rough estimate. It's not meant to be accurate anyway. So assess and use it at your own risk. Then, if you are planning to use it, the next thing you need to do is to make sure these text numbers are correct. So the general rule in this template is you don't touch the cells that are gray, in gray with a gray background. So they are supposed to be automatically populated by formulas. You should only edit places like these places without another background color. So the first thing is you definitely need to go into at least the tab that is corresponding to your own um, tax filing status. And then you need to see if these numbers are up to date. So for now, these numbers, for example, these progressive tax bracket numbers are the numbers for 2022. Um, if if it's a different year now, then you have to definitely change these numbers by looking it up in the IRS or any website with that information and update all these. So these eventually we will have the taxable income coming into here, which will be from some other sheets and other tabs. So then based on these tax brackets, the formula here will calculate your tax based on these numbers. Similarly, you also want to put in the numbers for the standard deduction for this year, 401k limit, pre-tax 401k limit for this year, and also certain information about what's your long-term capital gain and what's your net investment income tax rate brackets in here, and put it in here. And based on your AGI, we will be able based on your numbers here, the taxable income here. Actually, based on the AGI, we will be able to find out the right tax rate for you. So for the normal ordinary income, it's a progressive tax. So we need some complicated ways to calculate the real numbers as a progressive way. But it seems for the long-term capital gain and for the net income investment income tax, they are not in a progressive manner. So we'll just be able to directly find out the tax rate for your income bracket. And at least you need to update, make sure the tab of your tax filing status is updated because that's what you will be using. Other methods, which are the real estimators in our template. So the idea of this template is to figure out how much tax you should withhold for this year to avoid ever hitting a underpayment penalty. So normally when you file tax returns and if your tax withheld for that year was uh, if you are owing too much to IRS, more than $1,000, then you have a risk of hitting the underpayment penalty. Um, so to avoid that, the IRS has two uh, approaches for you to waive that penalty. And so one is by using the current year's tax. So if you withhold at least 90% of your current year's tax liability, then you are actually good. The other way is you can withhold with the previous year's tax number. So if you withhold at least 100% of your previous year's tax, then for this year you're also good. But the catch is if your AGI was pretty high for previous year, then this year you have to withhold at least 110%. So for example, if your previous year's tax number was $50,000, this year you have to withhold at least $50,000. But if your AGI is high, then you have to actually withhold uh, at least $55,000. And the way that this estimator works is we figure out how much you need to withhold for your entire year, and we subtract your already withhold number from this number. So that's the number that you have that you still need to withhold throughout the rest of the year. And then we divide that into your remaining pay stubs and your remaining GSUs so that we can figure out what's the correct rate for each of them. Now let's look at this. So firing status, you have to choose the firing status, and when we talk about this previous year's tax, this safe harbor method is easier to use because the numbers are very predictable because it's already set out number that's a previous year's tax. But the big assumption here is that your firing status is not changing between the previous year and the current year, because I don't know what's the requirement for safe harbor method if you were single and now you're married. I couldn't find a very good document from IRS about this situation, so you have to talk to a tax professional if you are in that situation. Okay, now let's assume you have been married, filing jointly for previous year, and you are still doing the same for this year. You first, of course, you put in your tax year number, which will actually determine the end of the year number, and then we need to know your previous year's number. That's our base. So assume you paid $40,000 tax and your AGI was maybe 250,000. These are all made up number, but we'll get an idea. Now also we need to know your Y2D summary because for GSU we need to know how much GSU you already obtained. This is just for the case where your supplementary income is more than 1 million, because anything more than 1 million will be subject to a 37% supplementary income tax withholding, and you don't have any choice to lower it. So assume you are already getting like maybe 100,000 from your GSU. Okay, now we also need to know your already withheld federal income tax total. That is including from your from your salary, bonus, and GSU, everything, because we need to subtract this number out of the total number to figure out what you still have to withhold for the rest of the year. Let's say you got maybe just 10,000. Okay, now you add other sources. What are you going to withhold from other sources? For example, your spouse's job or your other jobs. Your spouse's income doesn't matter in this case because we are using just based on the previous year's tax. And we're saying your filing status, we assume, is not changing. Now, you have to figure out your remaining GSU that will be vested this year. We need this because we need to divide that equally into each GSU vesting, each GSU. Let's assume you have 20. You can find out this number if you go to your equity awards account and just look at the vesting schedule. It will show you all the upcoming vestings. You will need to figure out what you will get each month and add them up until the end. Okay, now the Google stock price will determine, like if we say like withhold 30%, then the Google stock price will actually tell you how much dollar money you are withholding from each GSU unit. So here, this will take a big guess, and that is a primary source where situations may change, and you need to revisit this template from time to time throughout the year to make adjustments. But here we'll just assume it's 2,500. Now we also need to know your last pay slip's tax withholding number total. Let's assume it's 800. And from the same pay stub, you will be able to figure out, okay, what was the last pay date, and then you find out the next pay date. Normally it is uh, paid bi-weekly, so you just add 2 weeks onto that last pay date. Now we have all the inputs to be able to figure out how many pay periods still remaining that can use an updated W4 change. Keep in mind that if you change W4 today, it may take more than one cycle to take effect. So your upcoming payday may not have the updated withholding number. So that's why we will need to we don't take the next one into account. Okay, now based on your previous year's AGI, I figured you are in the 110% multiplier bracket. And so we calculate your total income withholding required for this safe harbor method, and we figure out, okay, this is how much you need to withhold throughout the year. Now here you will be able to see how much you will be withholding from your payslip and for your GSU, and then this is the number that you need to make sure your payslip will be withholding. So compared to your previous 800 withholding, you definitely need to add $73 as extra withholding to your W4. And but some people say, okay, I don't want to withhold so much from payslip. I want to withhold a little more from my GSU. Okay, you can change this number from 22 to 37. You pick a number. Let's say 30%. If it's 30%, okay, then you always hold roughly like equal number between your payslip and GSU, and you should put you should adjust your federal supplementary income tax withholding rate to 30%, and your pay stub can take a smaller withholding in comparison. So that concludes this method of safe harbor method with previous year's tax. Now let's look at the other method. That's using this current year's tax, and it's more complicated. Why? Because we don't know what your current year's tax is going to be. So a lot of things may change, and so you need to give it more, you need to revisit this more frequently to make sure everything is still as planned. But here, and also here, like because every person's tax situation is very different, and as we mentioned, we're using a pretty simplified formula here to estimate your current year's tax. So if you could figure out your rough tax liability from, for example, the IRS website, and you think that is pretty accurate, then directly use that, and and then you probably just want to put into this final formula, final cell, instead of using whatever we are putting up uh, all the way here. You just need to like put a put your real total income tax for this year into this line 43, and then we will be able to and you can ignore everything, almost everything else about your your total income and etc. So that it will already just calculate how much you should divide into your GSU and pay stub accordingly, according to what you have here. So if you have that, the only things that you need to figure out, you need to put in is your remaining GSU count to vest and the GSU stock price, because as we mentioned, that determines how much you are actually going to withhold from each GSU vested. And you also need to put in the federal income tax already withheld by Google, because that determines like how much you are still owing IRS. And you can pretty much ignore everything else except that, you also have to put in your already withheld incomes from other sources. and also you have to put in the still you have to put in the payslip number and also your next pay date number so that we can calculate how many pay periods are still remaining. So if you don't want to use the IRS tool to estimate your total tax for this year, you can also use these cells, put in uh, your numbers, like your total expected salary, annual bonus, other sources of income, short-term, long-term gain, etc. And then we will use these numbers, and use the formula. Basically, the basic IRS formula about your total income minus deductions, and then look up in the table that we had here, and it will calculate your total tax liability, and then it will generate still again this line 43 here. So if you can find this line 43 number elsewhere, use that number, is totally fine. Okay, once we have the total income tax number here, it will calculate the 90% of this number as you're required in withholding, and calculate how much you are still owning to reach that goal. And the remaining is just pretty much the same as the other method. You can adjust this withholding rate and figure out what's your optimal approach of withholding. And so the biggest factor that can make things changing frequently to me is the Google stock price, because uh, if you estimate it to be too much, then you actually will cause like less actual tax withheld, because that potentially that means your total tax liability actually will go up. Oh no, sorry. If you estimate the number to be higher than reality, then you will actually each of your GSU will actually worth less compared to what you anticipated, and your total withholding number will actually be smaller. But if you are estimated to be too small, then your total real tax liability will actually go up, because you're getting more than planned, and then that 90% number also goes up. So things will be more complicated. So I would say pick a number that's uh, roughly closer to the real number, and keep updating, revisit this template when you see there's a big change in the number. If you are choosing which method you are going to use, you can choose, you only have to meet one of the requirements, either the safe harbor method with current year tax, or the one with previous year's tax. The one with the previous year's tax is probably more predictable and probably easier to use, but if you are in a high HI bracket, and also if your income is not increasing like at a 110% rate every year, then you are potentially going to withhold more than needed. With the current year's tax, it's actually probably more, you would be withholding less needed, but it's more likely that you will probably hit the borderline if you are playing too aggressively. So I would say probably if you really want to avoid the underpayment penalty, you probably want to play a little bit conservative. And also, if you are going to use the current year's tax safe harbor method, make sure you read the disclaimers about how we are making assumptions for our formula, because your situation may be different, and your numbers using the same formulas may be different, and you may need to tweak the spreadsheet to make it fit your numbers. One way that I would recommend is you can put in the numbers of your previous year and see if the total income tax that we estimate here is actually matching what you are getting from your previous year's tax return. And that will give you a cross validation to say if these formulas are doing well or not, and if not, where they are, where's the difference and why. And this is a spreadsheet, so you can make your own adjustment to make it actually work for you.